as VCs, you have to have a lot of expertise in the investment that you make. And for clean tech, as you've mentioned, there are so many different underlying, I guess, fundamental disciplines, mechanical, electrical, biotech, etc. How do you keep abreast with, how can you specialize in so many areas?
That's a great question. It's a challenge for all partnerships and partners who are doing clean tech. What we've ended up doing is leveraging the skill sets of all of our partners. We've got some partners who are outstanding in material science, so they really get sort of advanced materials and how they apply within clean tech. I've got two partners, Steve Jurvetson, Jennifer Fonstad, who are outstanding in the biosciences. And so they spend all the time. I don't do anything in the biosciences, applications in fuels as an example, but Steve and Jennifer do, because they just know the underlying technology much better than I do. And so we're all sort of specializing little by little.
Okay.
But you've got to leverage the entire partnership. The enabling technologies are so broad, to your point,
right,
that you need more than one person to do it.
Right. Steve Wesley, you probably know from the Wesley Group, did a presentation once, and he likened the green tech era to the Renaissance. I guess both in terms of the significance historically, but also in the sense that you have to know many different things, whether it's you individually or as a firm.
I've got to steal that from Steve.
You like that?
I like that.
Yeah. So with clean tech, do you have to because it's somewhat purpose-based, do you have to not only evaluate the technology, the market potential, the financial potential for your return, but also look at whether it really is clean, more of a social element in it?
Yeah, and I think we're not a double bottom line fund. And so what we're looking for is gross dollar returns, returning IRR to our LPs. There are a lot of funds that do have a double bottom line, either explicitly or implicitly, meaning they either map and match the real greenness of their investments, or implicitly in that they are really only looking for things like renewables because they promise their institutional investor base, so that's their thesis. We typically look for the underlying green nature of the investments because we just believe in it. We believe that society is going to start paying for this. And
so you make a judgment that we believe this is green, we believe this is clean, so we make an investment.
Yeah, and you do for a couple of reasons. I think the regulatory bodies are, in a whole, are looking for they're making a decision on what constitutes a green company or green technology. And so, we're seeing a lot of renewable portfolio standards, which 29 states now in the United States have, which is trying to get to some level of renewables within their energy mix. And that includes solar, wind, but there's only certain categories of stuff that fall into that. If you're thinking about carbon, will it fall under the CDM mechanism for Kyoto? And that will judge whether it falls into that either regulated or unregulated market for carbon credits. And so you have to implicitly sort of spend some time trying to understand that.
Or how do you deal with, for example, controversial technologies, for example, in biofuel? There has been controversy, as you probably know, energy versus food, or other problems, whether this really has if you look at the total life cycle, whether it is clean or not. So when you face that dilemma, what do you do?
So for us, again, we go back to is it an economic model that makes a lot of sense?
Okay.
And so we have not invested in a traditional ethanol or a traditional biodiesel company. Biodiesel is mostly made, best way right now is made from palm oil. And personally, I don't believe that's sustainable. I don't think there's enough margin built in because of the cost of the oils. And so what we focus on is waste food stocks or waste feedstocks. And so it could be the output of a production process from from any kind of food refiner that's it's a cost to them to doing business. They've got to get rid of that cost. We can use that to create a biodiesel that then can be used back in the trucking fleet that they have to buy diesel for, so it's blended on site. Makes a lot of sense because the feedstocks are distributed. And when you think about the emerging markets of India and China, the logistics and supply chain problem moving feedstocks is really high. And so if you look for a distributed technology that can be utilized with waste feedstocks, then your input cost is the waste feedstock zero, and it can be done in a distributed manner. So it's scaled down relative to using traditional food grade feedstocks.
Okay. Is investing in clean tech unique or different in any other way compared to the other industries that you have invested in?
Yeah.
For example, are the entrepreneurs somewhat different than, say, internet entrepreneurs or semiconductors?
So when I started, they were very different. So I've been investing in energy technology and clean tech now since 1996. And the entrepreneurs back then were really coming out of regulated industry, coming out of utilities, and that was the thesis back then. Either that or they were really deep scientists, fantastic minds, very scientific. The one thing that's changed over the last 5 years, 6 years is that the entrepreneurs are coming from all over. We're seeing tons of internet entrepreneurs, lots of software entrepreneurs, lots of folks from the semiconductor industry going particularly into solar, lots from the biotech industry. And so this thesis has really sort of grabbed the entrepreneurial mindset out here in Silicon Valley and across the globe. So it's been great to see that. The first part of your question was interesting, was what's different, and it's incredibly different. The markets for all these products are global. Meaning global consumers of all these technologies are China, India, Europe, US. All the regulatory drivers in those regions are vastly different. So trying to understand the regulations and the regulatory drivers in the global context is very, very difficult to do as a VC here in Silicon Valley. I think the other interesting thing is that the number of clean tech companies that are popping up in China, India, Europe is incredible. Usually innovation has historically been in the innovation economy, which is the US, and really out here in Silicon Valley. But we're seeing companies from all over that are creating, really making an imprint within clean tech. And so the mindset that we have to take is global. I would say the other thing that's really changed is the capital intensity of some of these companies. Not all are incredibly capital intensive, but certainly some of them are as you get to production. And so, that's sure changed our view of how we invest capital. Typically VCs were capital, really focused on low capital intensity businesses in general.
Yeah.
And traditional consumer internet companies don't take a lot of capital to get traction. Software a certain amount, semiconductors a certain amount. When you talk about building industrial scale projects or utility scale projects, that takes hundreds and hundreds of millions of dollars. And that's not sort of a mindset that traditional VCs have had. So that's been unique.
Do you have to also deal with the governments more on the policy regulation issues, etc.?
That's right.
Are there any new skill set?
Yeah, so I think that's right. I think there's two things that we've done. We've learned a lot more about government regulations and globally, to my point before. But the other thing that we've done, we've become advocates, right? There is a lot of discussion about what the right green policy should be for the United States, whether it's renewable fuel standards and the breakdown between traditional corn ethanol versus cellulosic, or whether it's the RPS standards statewide and nationwide. There's a big argument going on right now in Capitol Hill about the investment tax credit, whether they're going to extend it 8 years, 5 years, or even 1 year. It's due to expire at the end of this year, and it's a big concern for solar companies. And so we're finding ourselves spending a lot of time, both as individuals and as an organization. The NBCA has been very active pushing the clean tech and green tech thesis up on Capitol Hill.
Okay, good.